International finance might seem distant, but it shapes your daily expenses more than you think. The US dollar has long been the world's go-to currency for global trade, giving America unique economic advantages. This demand keeps the dollar strong and borrowing costs low for Americans. But what if a major US bank started facilitating international trade in China's yuan instead? That single move could signal a shift in global power, affecting everything from gas prices to mortgage rates. The dollar's dominance isn't just a technicality, it's a pillar of affordable imports and stable finances. If that pillar weakens, the cost of living could rise, and financial security could become less certain. Understanding these shifts is crucial. They're not just headlines, but stories about your money. The world's financial system is changing, and those changes will reach your wallet. That's why a bank's currency choice matters to you. If a US bank started using the yuan for international trade, it would be a game changer. This move would signal a major shift in how global finance operates, challenging the long-standing dominance of the US dollar in international markets. Today, most trade with China is settled in dollars, but switching to yuan would bypass the dollar entirely. This would make transactions with Chinese partners faster and potentially cheaper, reducing the need for currency conversions and the risks that come with fluctuating exchange rates. This isn't just a technical swap, it's like switching the language of global business. It would require new systems, new relationships, and a new way of thinking about cross-border deals. For the bank, it's about staying competitive as China's influence grows. Adopting the yuan could open up new opportunities, attract international clients, and keep the bank relevant in a rapidly evolving financial landscape. Such a move would legitimize the yuan, encouraging other banks and companies to follow. It could set off a chain reaction, making the yuan a more common currency in global trade and finance. The result? A gradual shift away from the dollar's monopoly on global trade. Over time, we could see a more multipolar currency system, where several currencies share the stage. But it's controversial. Washington relies on the dollar's dominance for economic power. The US government uses the dollar's central role to influence global policy and enforce sanctions. The bank would face political pressure, balancing customer needs with national interests. Executives would have to navigate complex regulations and public scrutiny, all while trying to serve their clients. This decision could spark a snowball effect, accelerating the global use of the yuan. Other banks and businesses might quickly follow suit, eager not to be left behind. It's a tightrope walk between tradition and a rapidly changing financial world. The risks are high, but so are the potential rewards for those willing to adapt. The implications would ripple through the global economy. Investors, governments, and businesses everywhere would have to rethink their strategies and adapt to a new reality. The dollar's supremacy would no longer be taken for granted, and the world of international finance could look very different in the years to come. China's push to globalize the yuan is a strategic move that's been years in the making, reflecting the country's growing ambitions on the world stage. As the world's second-largest economy, China wants its currency to play a much bigger role in international finance. One of the main goals is to reduce its dependence on the US dollar, which has dominated global trade and finance for decades. By promoting the yuan, China shields itself from the influence of US monetary policy and the risk of sanctions that can disrupt its economy. To achieve this, Beijing has set up currency swap lines with dozens of countries, allowing them to trade directly in yuan. It has also developed its own payment systems like CIPS, making it easier for other countries to use the yuan for cross-border transactions. China actively encourages its trading partners to settle deals in yuan, especially through massive projects like the Belt and Road Initiative, which spans dozens of countries. The People's Bank of China is pushing for a larger share of global trade to be conducted in yuan, showing real determination to internationalize its currency. The ultimate goal is clear. China wants more control over its economic destiny, and to be less vulnerable to external shocks. By reducing its exposure to dollar fluctuations, China hopes to stabilize its own markets and protect its interests. China is also diversifying its reserves, buying more gold and other currencies to reduce reliance on the dollar. At the same time, it's launching a digital yuan, aiming to speed up cross-border payments and embrace the future of money. These steps are slow but steady, gradually chipping away at the dollar's dominance and building confidence in the yuan. The yuan's rise is a long-term strategy, not an overnight revolution. It's a marathon, not a sprint. Each move brings China closer to making the yuan a true global alternative, reshaping the future of international finance. The US dollar's role as the world's reserve currency is a hidden superpower. Central banks everywhere hold dollars because they're stable and reliable. This exorbitant privilege lets the US borrow cheaply. There's always demand for treasury bonds. It keeps interest rates low and the dollar strong, making imports affordable for Americans. US companies benefit too, trading globally in their own currency. The dollar's dominance also gives Washington powerful leverage. Financial sanctions can cut off adversaries from the global system. This financial influence is a cornerstone of American power. But if the world finds a real alternative, that leverage could fade. The dollar's supremacy isn't guaranteed forever. A shift would mean higher borrowing costs and less global influence. America's financial edge depends on the world's trust in the dollar. De-dollarization, the move away from the dollar, directly threatens America's ability to borrow cheaply. Global demand for dollars keeps US debt affordable. If countries shift reserves to yuan, euros, or gold, demand for US bonds drops. Lower demand means higher interest rates, making it more expensive for the US to borrow. Even a small rate increase on trillions in debt means billions more in interest payments. Over time, this could cost taxpayers an extra $1 trillion or more. Money spent on interest can't go to healthcare, infrastructure, or education. Higher borrowing costs create a dangerous cycle: more debt, higher rates, bigger deficits. The US would lose its exorbitant privilege and face tough fiscal choices. De-dollarization could force painful decisions about taxes and spending. The era of easy borrowing would end. America's financial future would look very different. If the dollar weakens, you'll feel it in your wallet almost immediately. Everyday items you rely on, like electronics, cars, and even groceries, would become noticeably more expensive. That's because so many of the products we use are imported, and a weaker dollar means it takes more dollars to buy the same goods from abroad. Whether you're shopping for a new phone, a family car, or just stocking up on food, you'll see higher price tags and feel the pinch at the checkout. Everyday expenses would rise as the dollar buys less abroad, making it harder for families to keep up with their regular bills. Even simple pleasures like dining out or going to the movies could start to feel like luxuries. Savings and retirement funds tied to US bonds could lose value as interest rates climb, putting more pressure on those planning for the future. If you're saving for retirement or your child's education, you might see your nest egg grow more slowly, or even shrink. Inflation would erode your purchasing power, making your money stretch less. The dollars in your wallet simply wouldn't go as far, forcing you to make tough choices about what to buy and what to skip. Borrowing for homes would get pricier as rates rise, making monthly payments higher and homeownership less attainable for many. Borrowing for cars would get pricier as rates rise, so upgrading your vehicle or buying your first car could become a bigger financial hurdle. Borrowing for credit cards would get pricier as rates rise, making it harder to pay off balances and avoid mounting debt. The dream of homeownership could slip further out of reach for many, especially first-time buyers and young families trying to get started. Small businesses would face higher loan costs, slowing growth and job creation. Entrepreneurs might delay expansion or hiring, affecting local economies and job seekers. On the upside, a weaker dollar could boost US exports, making American-made goods more competitive overseas and potentially increasing demand for what we produce. On the upside, a weaker dollar could boost manufacturing jobs, as factories ramp up production to meet new demand from abroad. But for most families, the immediate impact would be higher costs and tighter budgets, forcing many to cut back on non-essentials and rethink their spending habits. The transition would be challenging, especially for a service-based economy where many jobs depend on consumer spending and business confidence. The cost of living would likely rise before any benefits are felt, leaving many Americans struggling to adjust to a new financial reality. A US bank adopting the yuan would mark a turning point in global finance. The dollar's dominance is eroding, and a multipolar currency world is emerging. Americans must prepare for higher inflation, pricier imports, and rising interest rates. Fiscal responsibility in Washington is more urgent than ever. The days of easy borrowing are ending and tough choices lie ahead. Adapting means strengthening the US economy, fostering innovation, and addressing debt. Individuals need to boost financial literacy and plan for a more complex world. The story of the dollar and yuan is about shifting global power. Whether the transition is smooth or rocky depends on today's decisions. A major bank's move to the yuan signals the future is arriving fast. America's challenge: navigate change with foresight, not fear.